Good morning, traders. This is Michael coming to you from GammaEdge on August 28th, Monday, August 28th. We'll be starting a pre-market morning strategy session. We'll be covering market structure, 0 DT, +1 DTE, also the balance of the week. And we'll also be looking at our tick market model, and then we'll be looking at some levels pre-market here as prices moved up to transition levels, at least on SPY and SPX pre-market. So we'll go ahead and jump right into it.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
We're looking at the PM settled here, all expiries turned on via the black tiles here. If you're using these charts and getting a bearing and understanding, the first thing you should denote is the transition area that is outlined with the blue box. And then you should also have your eye drawn to the spot price, closing spot price for Friday, which is denoted by the yellow bar here. 44.05 to 44.06, I believe, is our closing spot price. We are right in the middle of transition, so could go either way. Really not a well-defined structure of spot above and below transition. We will also note that we are in the money and out of the money put dominated as we continue to be in that market structure through the PM settled here. We do have some positive delta nodes noted by the green. Areas above and below transition. These can be areas where spot price or price action can react as we move up or down through those levels. To have an upward movement in the market, we would first need to get above the positive transition level here and hold above that level, and then we would like to see some of these puts above us, these in the money puts denoted by the red net delta here, either expire or evaporate or close mechanically, and that would allow spot price to move up. Again, large amount of net delta overhead can be areas where puts a price cap on price as we move up, unless these are mechanically closed or evaporate through expiry. So 44.50 to the upside would be an important level to denote where that is at on your chart. Possible stalling level as we move up to that. Above 44.50 would be looking for 44.75. And conversely, on the downside, 4,400 continues to be an important level of demand. We tested 43.50 last week multiple times. Again, a significant amount of net delta sitting there in gamma. So it could be another demand area if we do get down into that area where you would see some supportive type action. Again, out of the money and in the money put dominated structure. So that is a weak structure overall. So make sure you keep that in mind. We'll move into the 0 DT. Again, quickly identify your transition levels. 44.05 to 43.90. Spot price closed right at the top of transition. Again, note that we would need to be above transition, positive transition for any move up. We have delta nodes coming in at 44.25 and 44.40 on the upside, which also is a confluence with the PM settled at 44.50. We do have some call speculation above where spot price is for 0 DTE, so that is a little bit of a notch for the bulls. If we want to move up to there, again, we would have to start capturing those calls and moving to the upside, and then we'd see some stalling, most likely anticipated at 44.40, 44.50. If we did get above those levels, then the next logical area, positive delta area, would be up at 44.65. Again, in the money and out of the money put dominated as denoted by the negative gamma conditions. So make sure you keep that in mind. Still a weak overall structure for 0 DTE. To the downside, we'd be looking for 43.75 and 43.50 for demand levels if we move down into those levels. +1 DTE, again, quickly identify transition noted by the blue box. We are below transition with spot price as of the closing Friday. Again, 4,400, extremely important level. So traversing through this transition might be a slow, kind of laborious process, at least on the +1 DT. We do have some positive deltas here that we've noted. Make sure you note those on your chart. 44.55, important level to the upside, which again brings in that confluence of the PM settled and 0 DTE. So moving up to this is a possibility, but then stalling into that area would be another if this then this that we would take into account. Again, below 4,400 would most likely bring in some more weakness down towards 43.50, which again, that's a confluence on the multiple expiries that we've denoted. Balance of the week here, quickly identify transition, matches pretty well with what we're seeing. 43.85 up to 44.05. Again, if the bulls want to move to the upside or price needs to move to the upside, we need to move above this positive transition level, which will also be on your TradingView and Thinkorswim scripts. Those will be updated at 10 a.m., but the previous run notes those transition levels at the open. And then moving into that 4450, you can notice the net delta continues to increase negatively up there at 4450. And if we got above 4450, we see some positive delta nodes at 4465. Conversely, downside 4350, largest amount of gamma sitting there, and we do have some positive in the money call delta sitting there, noted by the green here. We'll move on to the combo complex. Again, in the money to out of the money put dominated, as we've been seeing for the past few weeks. This was completely red. We do see a little bit of green starting to creep in. So if the bulls want to have any chance, these in the money calls that are now below spot price would need to be maintained. And then you'd want to see the evaporation or expiry or mechanical closing, whichever you wish to choose to look at there. These would need to be closed and start filling in with the green net deltas. That would be out of the money call speculation, filling in some of the in the money put speculation that is above spot price here. So 4450 the upside, again 8 billion net delta sitting there, significant amount, so that could possibly be a stalling area. And then you note the larger areas up there at 4475 and 4500 below spot price. Again 4350 obviously in the money calls below us. And note that the net delta there is 4 billion positive net delta. So again, possible demand level as we move down into there, supportive type action. Anything below 4350, then would probably most likely bring in more weakness. And we note that 4300 extreme level, negative GEX, 28 billion net delta sitting there. That would most likely be demand area, 448,000 contracts sitting there. We'll go ahead and move on to the landscape view. Negative GEX 4300, as I just pointed out there on the combo complex. Again, plus GEX is maintained at 4600 through the past few weeks for the in the money now the money put put domination. So that is a nice feather in the cap for the bulls that plus GEX really hasn't moved. We still see call speculation out here all the way out to 4800 and 5000. So those still haven't closed, which is still can embolden the bulls a little bit. But again, these put speculators have filled this in nicely here. Again, negative GEX 4300, and you see targeting all the way down here to 4000. So just definitely keep that in mind. Transition very well noted here at 4420. So we'll go ahead and move on to the tick market model. We did see the bolded short-term CT move above the moving averages on Friday, just barely. We are seeing compression here, so that is a slightly positive development. Conversely, though, the new lows still outpaced new highs. Filter tick plus 1,000 minus 1,000 was just barely above zero to close. And then we still have a severe negative slope on our market model, red below cyan. So systematically going down here, we have 2 or 3 yellow to red lights, one positive light, possible state transition of the bolded CT moving above the moving averages, but again, we're below the colored ribbon with a negative slope. So highly prone to failure, which I discussed last week multiple times. I really wasn't all in cheer mode as we moved up. This bolded CT moved up here. Reason being, new lows were still outpacing new highs. Filter tick really did not accelerate quickly back to the upside. And cumulative tick finished up here nicely, but was still below the red moving averages. And just overall, we were not seeing a good market structure. And then we quickly failed the next morning. We denoted that very quickly early on. The new lows quickly outpaced new highs. Filter tick moved quickly below zero, and then we just kind of started another railroad track state down to the downside. So again, highly prone to failure. Shorten your time frames if you're looking to trade on the long side. Keep in mind, in the money now the money put dominated, weak structure, and overall market model is down with a negative slope. We'll move on to the ARCX. And there's the ARCX. We did see the bolded white CT short-term move above the moving averages. Again, severe negative slope to the downside, red below cyan. So again, market model is turned off versus via this looking colored ribbon structure, and again, highly prone to failure. So make sure we understand that even if we do get a trigger day on the CT short-term time frame, we still can fail pretty quickly as we move up into these moving averages. So what would we want to see? We want to see the bolded CT move above the short-term moving averages. You would want to see the short-term moving averages railroad track to the upside, and then start moving through the colored ribbons and moving above the cyan line, and start living above the cyan line for us to maintain a positive slope. So, okay. Hopefully that helps everybody. Have a great day. We'll see you in the Discord here in just a few minutes.